So the idea is that you only buy assets, but you need to define your assets as something that generates revenue, at least like at the kind of the basic terminology, right? So buying and holding, I wouldn't suggest, but if you can buy and put that crypto to work for you, that's a different story. So
hi, everybody. Welcome to the Crypto Weekly podcast, the show where we interview the top influencers, investors, and corporate executives in the crypto space. Today, I'm joined with Matthew Hopkins, founder of the Son of Tech, a crypto YouTube channel. Welcome to the show.
Thanks for having me.
Well, for those of our viewers that aren't necessarily as close to the space, can you maybe give a little introduction of yourself, kind of the things that you chat about on your channel, and maybe some of the background into your foray into crypto?
Yeah, so I run the YouTube channel Son of a Tech, and it started out as a tech channel maybe about 10 years ago now, 9 years ago in 2012, just covering graphics cards, etc. And then in 2016, I believe it was near the end of 2016, or maybe it was 2017. I have to go back through the channel and check. Basically the GPU shortage started and nobody was able to get their hands on graphics cards. Since I had already been doing kind of a channel and trying to review graphics cards, I already had some, and I noticed the RX 470 4GB at the time was going for like $400 on eBay, which made no sense. So I sold one, and then I was like, well, let me look into it more, because I had some other graphics cards, of course. And I looked into it more and found this thing called Ethereum, and that you could mine it with your graphics cards. And I was like, well, I'm just going to start documenting that process. And I started documenting how to mine, set up miners on Windows. And then, of course, it just took off from there as far as all the different options and covering overclocks and flashing the BIOS and replacing thermal pads and whatever it is, and just tried to document all of that as best as possible. And then I took a break when the bear market hit, because already I didn't really have a farm. So I had like maybe 2 or 3 rigs and I didn't really have a farm. So I kind of took a break because I wasn't making enough on YouTube either to do anything with. And I continued my day job, which was a cloud solution specialist. And then in 2020, around May, I noticed the halving was coming. The pattern was like, oh, this is going to happen again. So I started accumulating cards and built a farm, and then documented that process. And that's kind of where we ended up today.
Amazing. 10 years later, over 140,000 subscribers on your YouTube channel. Seems like you're doing very, very well, and providing a ton of great input to the crypto community. So thanks for that. I'd like to kind of ask you a broad-based question. You know, I've been in the space for quite some time, and one of the things I've regretted is not getting into mining myself. For somebody who's new to the space, would you recommend kind of the buy and hold strategy, or getting more involved in building your own farms and actually starting to mine the cryptocurrencies yourself?
So personally, my philosophy comes from a book called Rich Dad, Poor Dad. Have you ever read that?
I've heard of it. Haven't got
okay. So the idea is that you only buy assets, but you need to define your assets as something that generates revenue, at least like at the kind of the basic terminology, right? So buying and holding, I wouldn't suggest, but if you can buy and put that crypto to work for you, that's a different story. So if we're talking about decentralized finance, for example, right? Lending out, buying, lending, and that sort of thing, or staking, if you're going to get into doing any sort of proof of stake coins, or running master nodes, for example, would be another way to generate revenue. So as long as you're generating revenue from the perspective of like being successful in the space, that's really what I think is the easiest way to focus on something. Trading can be very, very risky and is also very time consuming. So you really don't want to be focusing too hard on trading unless that's what you do for fun, at least in my opinion. And then mining is obviously something that generates revenue. That being said, at the current time, due to the chip shortage and the increase in difficulty in mining Ethereum, I don't know that I could say definitively that you should get into mining right now. I think it's a very difficult thing to do at this time, just from an ROI perspective. You're talking about, I think I saw the 3070 Ti, which launched today, is already going for $1,400 on the scalper market. When I built my farm, I was buying cards that had the same hash rate as the 3070 Ti for $300 a piece. So, it's kind of one of those things where mining is really about accumulating the hardware during the bear market. And that does require a little bit of foresight and kind of preparedness for those big Bitcoin cycles, right? So when we see the halving coming, then you can be like, okay, well, maybe now's the time to get in. And then make sure during that bear market, you've accumulated however much, you're willing to lose at the same time, right? Because it is still a risk. You do have the benefit, though, with mining of being able to resell your initial investment. Now, you will resell it at a loss in most cases. With the chip shortages, I'm not sure that's going to be true this time. We're going to have to monitor, obviously, the market for graphics cards. But typically, you will take a loss on the hardware. But at the same time, you get to write that off as depreciation. You have something coming back to you through taxes and through the resale of the equipment. If you do something like decentralized finance, which, like I said, is great and probably where you want to go right now, you don't have that, right? You don't have that additional asset to resell afterwards.
Mm-hmm. But yet, as Warren Buffett would say, compound interest is the eighth wonder of the world. So I totally understand the benefit of kind of buying and making your assets go to work for you. I guess my next question would be with respect to kind of the uncertainty around the future of mining, especially for Ethereum. So why don't we maybe dive into EIP 1559, what it is and how that's going to change the profitability of mining going forward for Ethereum.
So a lot of people are starting to think that because of the decreased fees, I think a lot of this is due to layer 2, that there might not be as much of an impact with EIP 1559 from what we see today for mining. That's because the fees have already come down quite a bit. So miners are making less as we speak right now. That being said, the idea behind EIP 1559 is to basically make the trades or the fees more predictable. There's no confirmation, or nobody's really come out and said from the ETH dev team that it actually reduces fees. So I think that's a big misconception that needs to be clarified for people. What it does do, though, is burn a portion of the fees that would normally go to the miners. So in theory, when we were initially looking at it, it looked to be like it was going to be a 30 to 40% drop. However, because the fees have already dropped thanks to layer 2 solutions, it appears that it might not affect mining as much. At the end of the day, we aren't going to be able to tell until it's actually implemented, right? Plus, we had a previous EIP that got applied here recently that also reduced fees. And the layer 2 solutions I'm referring to, for example, would be something like Polygon Matic, right? Where people are basically bridging over and pushing everything into there and able to do all their swaps with DeFi and everything at a much lower fee, right? So
got it. Okay, so maybe it's not necessarily as much EIP 59 that miners would tend to worry about, more so the switch over from proof of work to proof of stake in ETH2. What are some of your concerns, not just as a miner, but as a user of the ecosystem, about moving from proof of work to proof of stake and totally rebuilding your protocol almost from scratch?
Well, I'm not sure it's a complete. Well, I guess I would have to go through what you mean by from scratch as far as rebuilding the protocol, but let's just focus
using a
on
new consensus mechanism, let's say.
Right. Okay.
Yeah.
So as far as, and that'll also obviously impact layer two solutions. So that's going to be interesting as well. But proof of stake and proof of work there, I mean, obviously this has been a versus thing since the inception of cryptocurrency, with a lot of concerns revolving around it. Now, back when ETH started, you also have to keep in mind that they did a pretty hefty pre-mine, and they had distributed that out to founders, etc. And that was also against pretty much everything that anybody was in crypto was okay with at the time. So this is kind of a tricky subject because we don't know exactly how that will be implemented and if it will be successful. The arguments are already that, you know, ETH is centralized as it is. And I think that that's probably a little exaggerated. At the same time, there are concerns when you're talking about, you know, 40, I think it's like 44 million. And this is off the top of my head. Please correct me if I'm wrong, but I believe 44 million or somewhere around there has been mined. 77 million was part of the pre-mine. And when you start talking about proof of stake, you start to realize that there's a big problem there when distribution comes into play. And so the concern is that all the money filters to the top, and you have the same issue with the financial system that's built into cryptocurrency with proof of stake that you do with fiat, which is that top 1% issue of now everybody that has the top, they're going to stake all of their Ethereum and they're going to receive all the rewards, and all of that ETH will filter to the top. And there's no way for the little guy to get in at that point. Now, if you've been mining since the inception of Ethereum, okay, cool, you get to be one of those guys, right? But if you haven't been, then, you know, it's difficult to get into the ecosystem to start participating. And it will also come down to fees, right? And how much ETH it's going to cost people to even get in, that sort of thing. But right now, the price to stake would be 32 ETH, right? Which is at the current around $80,000 last I checked. You know, that's a lot more than even an overpriced $1,400 GPU right now.
Right. Yeah, and I think, you know, maybe to linger on this topic of centralization a little bit more. You know, it's difficult because we have ETH as this leading protocol that has the, you know, it has the market share, it has the network effect behind it. Do you see any potential threats from, you know, moving into this more centralized environment from some of the other base level protocols that might be coming up? I know you're a big Ethereum guy, and I am too. I'm just, you know, trying to understand if there are any other base level protocols, Polkadot, Cardano, Solana, that you might think could supersede Ethereum.
My point of view on that is they can all coexist. I've said this for a long time. Part of the reason is they can coexist is that they typically use different programming languages. So whereas ETH is going to be Solidity, you have Rust on Dot, for example, and there's going to, with different programming languages comes, you know, new developers and different developers choosing to on which platforms to work with. And I think adding bridges and that sort of thing is important. You know, I see a lot of coins that talk about development and they're like, well, no, we don't want to do an ETH bridge because, you know, we're better than ETH or whatever. And I don't think that's the right perspective to take. I think you should be bridging to everything as much as possible, especially if you're a newer, you know, bleep coin on the market right now, because the only way you're going to get people to participate in your ecosystem if it's easy to come from another ecosystem into that, right? Mm-hmm. And it can be as simple with the bridging as, you know, moving to a layer 2 on Ethereum. So people can start getting familiar with that, and I think that's important. Now, do I think anything is going to flip ETH? I don't think so. I think it's too much of a giant at this point to flip ETH, right? You talk about, I think, Cardano is significantly behind ETH as far as I'm aware, and so is Dot. So just the amount in circulation, all that sort of thing, right?
Yeah.
So I don't see that happening, but I also don't think it needs to happen.
Yeah, I agree. And I think, going back to not wanting to be maximalists in any capacity, I think is probably the best way forward for the entire crypto ecosystem. Um, one other thing I wanted your perspective on is in the advent of ETH 2.0 and ETH mining on GPUs becoming somewhat obsolete, where would you see hash power starting to move to within the proof of work coins? Is there anything that in particular? I know you've chatted about Raven coin and Ergo. Are there any other coins you might be looking at to see where hash power is moving to?
So I think the big ones you got there, right? Ergo is also working on doing Oracle, or being the Oracle for Cardano, which is a big deal. So that can be where some some hash power can go, and I think you have a pretty good chance at that lasting. And I actually have an interview coming up this week with them, and I can't remember his name right now, so I'm going to say them, to go ahead and go over those implementations, just because that's going to be super important, especially for miners. As far as Ravencoin, Ravencoin was that no emission release, like kind of bare bones Bitcoin influenced cryptocurrency, and it ticks all the boxes for marketing and for the following the principles of crypto, right? With the ASIC resistant algorithm. And, they've moved on to PoW, which is allowing for the AMD GPUs to be competitive, which was definitely needed. So there's some stuff that's going on there that's good. You got the NFT coming along, but they are one of those ones that doesn't want to bridge to ETH, as far as last I checked. And I think that it's not large enough to support all that hash rate. So this hash rate's going to have to split, and miners are going to have to be aware and be kind of feeling out how it works. Which coin do I need to go to? But there's also just a matter of ease of liquidating your assets to pay for power. And it's a lot more difficult on both Ravencoin and Ergo. Ergo will be a little bit easier with their working with Cardano, I think, than Ravencoin will be. But that's something to take into account, right? Is how easy is it going to be for me? Like right now, I can mine 30% of my farm to crypto.com, load up my little crypto.com card, pay for the power, and write that off on taxes at the end of the year or the quarter, right? It's a lot more difficult to do that with Raven, right? Because then I got to track when the Raven comes in. I got to track when I swap it to something that I can actually move to crypto.com. And then if that goes up in price before I can sell that too, then I also have to do. So now I have two sets of capital gains plus the income on the Raven coin. So it's a lot more difficult.
Right.
And I don't see, there's not really a coin that's mineable and competitive that allows for that right now, other than Ethereum. So that's going to be kind of interesting to see what ends up happening. As far as other coins, one that I was really excited about that seems to have fallen through was Cortex. And the reason I liked Cortex originally was because it was proof of work that figured out scalability. And they seem to be the only ones that really have. I know a lot of other coins like to claim that they have it, but they don't have the multi-chain systems, right? Most of the time when we're talking about those, we got, Cardano, Polkadot, and then Ethereum 2.0, and there's not really anything else. Well, there was a proof of work coin, but it's in China. China's got all the regulations coming down right now, and the coin seems to be struggling to gain any traction. But I did look at that one and was kind of excited for it. Unfortunately, it doesn't look like it's going to pan out. You do have, let me see, you do have Firo, which is going to be MTP. For the algorithm, they're going to be moving to ProgPal soon to make AMD cards competitive. The reason why AMD cards being competitive is important is you have to keep in mind that most large farms are running still old Polaris AMD cards because they were the best at the time, the RX 480s, the RX 580s, and so on. So any coin that wants to be able to accept a lot of the hash power that's going to come off of ETH needs to make sure that they're functioning well with AMD cards. So that will be an important move for them. And Firo is a privacy coin. So that's also where we once again get into the issue of moving it around. If you are a US based miner, guess what? No privacy coins are on any exchanges. You're just not allowed to have them. You're allowed to mine them. You're allowed to hold them, right? I guess I shouldn't say you're not allowed to have them. You just can't easily move them and exchange them for fiat. So you're not allowed to exchange, things like Monero, Pirate Chain, and Firo for fiat. The good thing about Firo right now is they have a Binance Smart Chain bridge and an Ethereum bridge. So they have two very important bridges that will make it a lot easier for miners to move their crypto or move their Firo to another network. Now, Binance, though, as we know in the US, has a lot of issues too. So, but at least there's the Ethereum portion of that as well. And then you could get into, whatever regulations are going to be around Binance later and try to figure out what that's going to be. I don't know. That's going to be an important one, though, for sure, especially with Binance Smart Chain right now. Because if you go from a US IP address right now to the Binance Smart Chain for swapping, it'll tell you, you can't do this. You have a US IP. So that's a whole other tangent, right?
No, I think, the core things I got and learned from there was that it's not only about the profitability of the coin, it's also about the liquidity of the coin and how easy it is to move around. So those are kind of three things you need to understand as a miner. You briefly touched on China and how they're kind of banning some of their dirty mining plants, coal powered mining. This is mostly with respect to Bitcoin. So maybe we can just chat about it. I kind of want to hear your opinion on the move of hash power out of China for Bitcoin. How do you think that's going to affect the price? How do you think that's going to, do you think that's going to rally the price because of it's becoming more decentralized? We're moving hash power around the world. Or do you think that will hurt because we'll be reducing the mining power on Bitcoin?
I don't think it's going to happen. It's not happening at this point, right? Okay. So when that announcement came out, China had 65% of the total hash power of Bitcoin network. And today they still have 65%. You can check the maps and check the latest hash power numbers, and it's not dropping off. Now, there was the assumption that this was because Iran had to ban it right after. So China was a lot of Chinese mining companies, to my knowledge, what I understood was they were going to be moving hash power from China to Iran. Well, in the process of doing that, Iran started having a bunch of blackouts. So then Iran banned it for the summer so that they don't have blackouts during the hot summer months, right? Because essentially AC units require more power at the time. So if you add the mining rigs, and I live in Texas and I mine, so I can tell you that, yes, you end up consuming a ton of power in the summer, right? And so the power grids couldn't handle it. So I don't know if maybe they were planning on moving it over, but what I do know is that it's not like China's going out and shutting down mining farms right now. Maybe they were like, okay, we'll give you time to move to Iran or wherever. And then Iran was like, no, we can't handle it. And we're kind of in this weird phase. But as I can tell right now, and like I said on BitBoy's show earlier this week, I said it looks like posturing. We don't have any evidence of any hash power being moved out of China at this time.
Got it. Well, thanks for that. I guess one of my last questions, because we got to wrap up pretty soon, would be just around the Bitcoin energy consumption debate, because that's such a, it's such a talking point for media. And it's one of these things that's had to be rehashed by the crypto community over and over and over again. I just like your opinion on, Bitcoin, knowing that we in the crypto space know it's not boiling the oceans. How do we come together and create a narrative that allows people to understand this is actually a better use of energy? it finds the lowest cost, it finds the path of least resistance. How do we come together as a community and create a narrative that actually is in favor of crypto in that space?
I think it's really difficult, especially when someone like Elon comes out and, with the tweet about Bitcoin using a bunch of coal power. And I think I made a video on it already where I said, like, the problem is not necessarily that Bitcoin is using coal power. It's that, the coal power plants are being used, right? Like, it's pretty obvious if you look at like Bitcoin mining farms in the US that they are attempting to move to clean, renewable energy. Most of them are investing more money than ever into that. Miners as a whole are incentivized to reduce their power cost. So the incentives need to come from the regulators that say, hey, we'll give you these tax breaks, or we'll give you this to go ahead and move to renewable energy. And that's where you solve the issue. You don't solve the issue from the Bitcoin miner side. You need to solve it from the infrastructure side. And once you do that, then, it helps everybody out. I know that I guess even more stuff's coming from Elizabeth Warren and the likes last night. So I haven't had time to catch up on all of that. But as far as setting a narrative from the mining community, I think we have it set pretty good. I think if you go through and look at what farms are doing, you can see the evidence that they're moving to renewable. The problem is that, the mass media that's currently out that's not a clickable headline for them. And it's really hard to fight that, right? I mean, you can even see on YouTube, crypto channels like mine that do really, really well will all of a sudden tank to like no views when Bitcoin's in the news, because they're going to push the MSNBC. And that's the way the algorithm works. And we aren't going to get to have our say until they're done talking about it. And so it makes it kind of hard to actually shift any narrative at that point.
Fair enough. Fair enough. Well, I mean, I think we as the community have a role to play in that, and you clearly have a big role within that community. So thank you so much for your time, Matthew Hopkins. Really appreciate it.